Hey everyone, welcome back to Crypto Cash. Thank you so much again for joining me here. I hope you're having a fantastic day. Let's taking a look here at Bitcoin, see what's going on. 99,000 some change, wicked all the way down to low 97K range to retest that local high. As we talked about yesterday, is kind of an important consideration for entry, or just more importantly, if the price were to range in this area of 97 to 100,000, the likelihood of further upside makes more sense, just based on the fact that it's it's an ascending type of trend. Range bound activity prior to a leading into a resistance is more likely to break out. So I think that the common theme here is that Bitcoin is more likely to go higher than lower. There's a lot of confirming factors. We'll talk about that, but we're not just going to be blindly bullish on this coin too. It's important to recognize that there could be some kinks in the chain or something that may it may infer that we shift direction too. So not trying to scare you or concern you. We just like to look at things abstractly and not just be blindly bullish. And we all know what that does for us, okay? So we're gonna take a look at liquidation levels first, kind of go from there. If you could please hit the like button, comment below, maybe just like the video every single time you watch the video, deeply appreciate it. To those of you who do that every time, thank you so much again for joining me. But more importantly, just thanks for being an amazing part of my life. I really love the comments and just the awesome feedback I've been getting here. There's an occasional troll here and there, but they're just, the kind of people that are, more short timers, if you will. They're looking for a quick buck, and that's just really not what I offer here. While I can offer some really good quality content, it speaks to different people in different ways. It really depends on where you're at in your trading journey. So let's take a look here, though. Best practice and the big picture here for us with Bitcoin is to generally look at liquidation levels first, and then to kind of work our way down from the larger to smaller time frames. Kind of just get a blended average of what's going on so we can make an informed decision. So take a look here. We talked about this yesterday with my community. I don't think I clued this specifically in the video, but there was a heavy concentration at 101,000. I sent that out to my community here in our premium chat. And basically just, from 99 to 101,000 was that area of liquidation that had been swept here. So we can kind of see that. There are some late shorts, of course, at 101,000. Of course, they're never going to give up. They're always going to do that, right? But the truth is, previous to that, we have 102 upwards about 104 as some larger, more previous short-term liquidation levels. And what I mean by that is that those are probably more so like mid to lower leverage shorts with liquidation events and or stop losses further away. But it's still a very relevant thing. But what is relevant is like the macro here. We can see people shorting. Imagine this, being short from back in January, essentially, or early January rather. Sorry, that's like the 6th. That's about 10 days ago. Imagine being short on that, being fully in profit by probably a significant margin down as low as 89,000, and it's almost back up to your stop loss or your entry. You know how stupid that is? So again, this is all the more reason why you want to consider securing profits more frequently. It really depends on your type of trading strategy, of course, but if you're going to hold anything for a long time, it's not a short position. You're going to be eaten up on fees if you're using high leverage, and just generally speaking, it's just inherently more risky because there's no limit how high the price can go. Having said that, though, that kind of implies that 103 to roughly 106 is that next area, that next deep concentration of liquidation. So just know if we kind of start getting closer to 102, 103, we're probably going to see a bit of a push to that 106 range. It's pretty likely. Liquidation delta is fully bullish right now. That's no surprise. We know that. We can see that. So anybody shorting at 100,000, I would just recommend not doing that right now. There's no reason to. Again, you might find some success. You're going to be one of those dudes or ladies that post online and is like, man, look how great I am. I took a high-risk trade. How awesome am I? Well, truth is, people like me that have been trading for a long time, we're rolling our eyes because we realize we can see through that crap. If you like to see those kind of results, that's great. Don't get me wrong. Results are good. We want to see that. I want you to be profitable. But I want you to be profitable in a responsible way, not irresponsibly. Okay. So again, there's tons of analogies I can't think of right now, but I just don't recommend high leverage and or shorting the potential top just because it's a potential resistance. You don't just short resistance without any other confirming factors. It makes no sense, right? Anyways, open interest here, we can kind of see people are pretty heavy at 94 to 96. That's the previous. And we kind of zoom in here, we can see 98,000 as well locally here, and also roughly 100,000. So people are starting to add to their position at 97 and 98K. And then, of course, late longs at about 100,000. So we can kind of see that there are more people adding in there. That reinforces support at 97,000, though, too. That's the reason why we look at open interest. It kind of helps us understand generally where people are buying the most. And in turn, it's usually considered a support or resistance zone. So the daily time frame here, let's quickly look at this here first. And by the way, if you're not familiar with like how I post my playout charts, I always try to give you guys 2, possibly 3 scenarios here. And the darker the color, the more likely it is to happen. So in other words, I feel more confident in thinking that we're going to be a little bit more range bound between 97 and 100,000, and then we leg up from there. But there is potential for the price to break through 100,000, retest as a support, and continue higher. That's kind of sort of happening right now with this descending type of channel here, this bullish flag. But once more, a little premature to say. Either way, I'm still leaning more towards the price going up just based on yesterday's analysis. But let's look at today and see if there's any shifts in the dynamic shifts or anything that's relevant. But future reference, again, I post playout charts in our Twitter, Telegram, and Discord. It looks a little something like this if you're not familiar. It's there for you if you'd like. I recommend enabling an alerts and all that so that way you can kind of stay on top of things. Anyways, SMAs on the daily time frame. As we talked about this yesterday, closing above 97,000 is super important. We did that. Okay, that's awesome. We're above the 20-day SMA as well. All moving averages are below the price action, letting us know that further upside is more likely. Okay. Same thing with the daily time frame here. We can recognize that we're over 50 on the RSI, generally a positive sign. While money flow index is tapering off, it's not a big deal really. Keep in mind it's a 14-day lag, so it's always going to be looking back 14 candles, and it's going to be tapering off because it still includes something like this, right? So that's kind of how that works. Money flow index is a very useful tool. Just be careful in understanding how it works, because if you're not familiar and you see like a big old shift, it can be a false positive in some cases. And I know a lot of people get like these green bubbles or these red squares on certain indicators that they use. And the truth is, if you don't know what that means, you're probably at a significant disadvantage. Anyways, let's take a quick look here at the simple moving averages. We can recognize here a few things here on the SMAs. We're above all 4 SMAs, right? They're hanging out in 97 to 94K. This is perfect. We love to be in this position. It's awesome, just based on the simple fact that there's a lot of confluence and support between the 95 and 97K range, which hasn't even been tested yet, right? We got that 0.618 fib level, that hypothetical support based on previous resistance. Okay, so again, a lot of reasons why the price action bounced off that level. And another thing you've got to recognize too, even though I use fibs frequently, try not to put it on a pedestal. If you're only using Fibonacci retracement or Elliott wave, it's a very, very limiting scenario. You have to use other factors in combination with that. It's amazing to me how many people are blinded by just how really cool looking Elliott wave is and looks, when the truth is it's all strictly hypothetical. I mean, everything's hypothetical, don't get me wrong, but if you're using just one indicator, it can be very limiting. So just friendly advice: be not try to diversify a little bit. But again, on the opposite side too, you don't want to use too many indicators either, because then you can inundate yourself with too many invalidations. So again, if you see what I do here, it's not perfect. It works well for me. I maybe use 2 or 3 indicators per time frame, and I only use 3 time frames as far as swing trading is concerned. I'm not day trading, so please understand that. If I were, I'd be using my 1, 5, and 15-minute chart as I typically would for that. Anyways, conversation for another day. We're over 50 on the RSI. We're not super overextended here. Stochastic swinging down while the price action is going sideways. That usually implies further upside based on the fact that we're cooling off and that people are starting to feel like this is a good value. They're starting to FOMO in. It's like, okay, great. We may not see anything less than 100,000 again. So that's kind of what the general consensus here is. We can see MACD is trying to diverge, but it hasn't fully done so yet. And while we are looking here, Elliott wave does appear, sorry, correction, I misspoke. TD sequential is effectively telling us that we're a little on the overextended side. So this consolidation effort that we're seeing right now is definitely positive. Ichimoku Cloud kind of letting us know that we are still in really good shape here, minus a couple of interesting factors. In other words, the conversion lines below the baseline telling us we're slightly shifting momentum to the downside. That comes from this pretty large red candle we saw there. But we've got a bullish engulfing candle to follow. That generally implies that 8-hour time frame, in this case, the 2-hour time frame, has been fully recovered and then some. Basically telling us that the bulls are controlling this time frame, right? We can see that typically reflected on our TPO here as well, where that local point of control is right there at the price action, where we can see that the bulls are effectively still in control at this point. Okay, now again, when it comes to the Ichimoku Cloud, being above the cloud is probably the most important. Second most important to me is the lagging span, which is still within the price action, but it's looking like it wants to break out. So hypothetically, we're at 100,000 or higher in the next 24 hours. That would be a pretty good buy signal, letting us know that we're in good shape, we're maintaining this range, and likelihood of further downside is lower based on us having a nice bullish type of rectangle pattern. We're consistently retesting a resistance level. The local support was tested and held very strong. There's a lot of confirming factors here letting us know that further upside makes a lot more sense. I'm also leaning more towards the liquidation range at 101 to 103, quite possibly even 103 to 106, getting hit in the relative near future. So with the long position that we have open as a community, it's recommended we keep that open because again, Bitcoin, we've snagged a good 31% off that, Dogecoin 33%. While we're not super heavy on longs, there's some pretty good opportunities in the market right now, and it's hard to catch them all. So try not to FOMO in, but also feel free to do so with smaller position sizing. But right now, when we're kind of on the edge of either breakout or potential retracement, even though it's still statistically more likely we're going to go up, you don't want to get too crazy and just go all in with every altcoin right now, okay? Because a lot of them are, or at least half of them are pulling back pretty significant when Bitcoin corrects itself. So just be mindful of that, okay? All the more reason to incentivize you to use low leverage so you're not going to get destroyed every turn, all right? Anyways, be responsible, folks. You'll see good results. I hope this made sense. I described it correctly. Thank you again so much for watching. We'll look forward to seeing you on the next one. Have a good rest of your day. Take care.